Welcome to Real Estate U with Lettiann.
Here we are. Welcome, Scott Kiesling this morning. Scott, welcome to our podcast, Real Estate U with Lettiann. So, Scott is with Fairway Mortgage. What is your title and what do you do there, Scott?
My title is loan originator, loan officer. Basically, I recommended clients. I go ahead and get them pre-approved for home loans, take their information, figure out what's going to be the best program for them, and make sure they're going to be comfortable with the loan process. That's
great. And even when I'm speaking with buyers and I'll say, oh, do you have a lender? And sometimes people don't really know lender, and I'll say, oh, a mortgage lender, a loan officer. Those terms, though, to people, especially first-time home buyers, they're looking for the word bank. And that's not always the case. So even just recently, a first-time home buyer said, what do you mean, do I have a lender? I said, oh, like a mortgage, a loan officer, someone to help you through the loan process. So I always try to be mindful that because we're speaking those terms every day, the consumer, buy and sell about the average of every 7 years. So it's kind of like having a baby. You forget.
Sure.
So today we're going to talk to Scott about obtaining a loan. What's the most important? Of course, we always, as real estate professionals, want to have our buyers pre-approved because, one, we don't want to spin our wheels and have them looking at properties that they can't afford or that they're not sure about. And then they have surprises along the way and they want a house and they can't get it. So today we're going to talk about what's the challenges you see, what are some of the challenges when people come to you and apply for a loan?
Well, first of all, let's just take a first-time home buyer come in. They've never been through the process before. They're probably a little bit overwhelmed about maybe what they've heard in the past about, maybe from friends or colleagues or parents. Hey, this process is going to wear you out kind of thing. Well, there's a lot of misinformation out there, and a lot of that has to do with, maybe just kind of Googling things and trying to figure it out on your own. So it's very important, just at the very start of the process, to get with a mortgage professional or with a realtor and really get a good idea as far as what they're going to be in store for.
I'm going to interrupt you because you said they Google some questions to start their process. Of course, everyone does that. But there's some bad things that can happen there.
Absolutely.
And I know what they are. But
if you Google, how do I get pre-approved for a loan? More than likely, you're going to end up with a national out-of-town lender, and you're going to, maybe click the wrong button, enter the wrong information, and get pre-approved without really actually learning anything about the process. And then all of a sudden, you think you're pre-approved. And when it comes down to it, you really don't know anything more than when you started. That's why it's important to maybe go with Fairway, who's a local lender.
Yeah, local. Always support local. # support local KC.
Yes.
Support local businesses. But it's such an on-demand economy. So when they're online, they think, oh, well, I'll just click and get pre-approved. Oh, here's an application.
Yeah.
And really, they're not pre-approved, and they never speak to a human.
Yeah.
And then it's just it goes downhill from there because when we're representing those buyers who have an online, we're pre-approved with, let's just not name any names online.
Right, yeah. And there's really no recourse. They've got this letter from, XYZ lender, national lender, and they really don't have any, like you said, they haven't spoken with anybody. They haven't really verified their information. I mean, maybe they put their income in. Maybe with what they put their income in as, maybe it's not the same thing that we would consider their income being. Mm-hmm. And that could throw off what they can get pre-approved for. So, yeah, it's if you start that path, then you're automatically going down the wrong road.
Yeah, exactly. And obtaining a loan and working with a loan professional, especially if someone is local, that's all the difference in the world. But people don't. They're like, oh, I don't need to talk to anyone. I can just do that online. But really, that's going to bite them in the butt later.
Yeah, it absolutely will. Yeah. Or it can, and it has happened. We've all seen it, where someone went out and thought they were pre-approved, found the home of their dreams, only to be, disappointed later when they found out that their pre-approval was no longer valid.
I know. Or they lose the house, and it's just such a waste of time.
It is, and it's a waste of time. And like I said, it gets their hopes up, and then it really kind of sours them on the whole home buying process.
Right.
So we want to make sure and, get them the correct information from the get-go. If you've got some issues where we've got to work on, then let's get working on them right away. Let's not waste time with, online pre-approvals. Let's look at the overall picture.
Even before you start looking.
Absolutely. I mean, that's the most important thing. You want to know what challenges are in front of you before you actually go ahead and start looking for a home.
And what can I afford?
Yes, exactly. Yeah, and that's one of the challenges. Can I afford that home there, or do I need to maybe drop it back a little bit and buy something a little less?
Right. So when people are considering purchasing a house, whether it's their first or their fifth or their 10th, what are some things they need to consider before the process?
Well, I mean, we're going to, first thing we're going to do is obviously we're going to work through the pre-approval. Everybody has heard that term, get pre-approved. Mm-hmm. Well, like we said, sometimes getting pre-approved is just entering information online. I don't think that's pre-approved in my idea, my estimation. I think you need to go ahead and have somebody ask questions. Don't just enter things online. That's a good starting point. Everybody's in this fast-paced world. Everyone wants to enter everything on their phone app or whatever. But once that's done, then what I'm going to do at Fairway is I'm going to take that information, I'm going to analyze it, and then we're going to have a conversation. Mm-hmm. Okay, then I'm armed with information. I have your credit. I have your income. I'm going to have a list of questions.
Tax information.
Yes, absolutely.
All of that.
Those are things that I'm going to ask right away to get a better understanding of their overall financial profile.
Right, because anyone can put in, here's my salary, but really you've only worked there 3 months. I mean, there's so many
factors. There are,
there's so many factors.
And when you try to look at guidelines, those kind of things, no two situations is the same. Mm-hmm. We have great resources at Fairway. I spend a lot of time, that maybe I don't know the answer for, talking with our underwriters, going through our internal internet and finding out the answers before we issue pre-approvals.
What I like about you and what you do, Scott, is you're a good handholder. You really guide people through the process, and it's such an emotional, stressful time. It's very emotional and stressful to the consumer.
Sure.
So having people who really care and help you along the way, who are accessible, whether you're speaking to them online, via email, but then they come to your office, and it's a good, comforting feeling. So
and that's to me that's comforting as well. I want to know that they're comfortable, and that's 100%. My job is to make sure that they know exactly, they're well informed, they know exactly what's going on.
Mm-hmm. So let's talk about credit. And we had this conversation recently too, because there's poor credit.
Sure.
And how do I remedy that? Then we just recently had someone with no credit because they paid cash for everything. Mm-hmm. So what advice can you give people about credit? Like, let's start with maybe someone with a bad credit score, and they go, well, I can't buy a house, my credit score is poor. But that's easily remedied.
Well, yeah, I mean, every situation, once again, is going to be different.
Sure.
So that's the most important thing. Let me go ahead and take a look at it. I'm going to analyze your credit. I'm going to figure out, you may think that, for instance, I paid off my truck loan or my car loan, so my credit should be better. Well, not necessarily. When you pay off an installment debt, it doesn't necessarily have a positive effect on your credit like you think you may. Having less debt would be a better credit score, not necessarily. So let me take a look at it first is the most important thing, and then we'll devise a plan. If you're not where you need to be credit-wise, then we devise a plan that'll get you to where you need to be. Okay, and if you don't start now, and and I tell you, if you start now, you can buy in 6 months. We're going to look at your credit and go, okay, you need to do these things, and you can buy next spring. Okay, if you don't do it now, then when you come to me next spring, it's going to be okay. You do these things, you can buy next fall. Mm-hmm. So let's get started right away. A lot of times the fixes are pretty simple. That'll help boost your credit score. So that's the most important thing.
So if someone's considering purchasing a home relatively soon, when should they call you?
I mean,
how far out?
I would say let's get checked right away. If you think you may have some credit issues, even if you don't think you do, but you're not sure, let's get it going right away, because sometimes these things just take a little bit of time to get fixed. So we don't know there's a problem until we look at it. So let's go ahead and get looking at these things, and go ahead and get started on the credit repair.
And you have a credit repair program.
Yes, and that's at Fairway. We have a program called Credit Tool, and Credit Tool. What we're going to do there is we're going to pull your credit. We're going to submit to these credit experts. They're going to go ahead and analyze your credit and devise a plan over time. How just certain steps, step by step, what you need to do to maximize your credit score in order to buy.
And it might not take 6 months. It might only take 6 weeks.
And that's a very good point. I mean, for a good example, I had a first-time home buyer come in, and he had zero credit. He had never used credit in the past. Well, all he had to do was get a secured credit card for $300. Charge $10-20 a month on it. By
maybe gas or something.
Yeah, fill up your tank, pay it off every month, and in 2 months, all of a sudden he had a usable credit score where he's ready to buy a home.
Oh, see, what a simple fix. But knowledge is power.
Knowledge is power, yes, absolutely.
So often people get so excited on demand economy, they find a house and then they're like, oh, I want to buy it. And then you have to backpedal. Whoops, yep. Sorry, Andy. Backpedal, lose the house. And it's just, again, the whole waste of time. So pre-planning and really finding out what you need to do, and knowledge is power. Right,
exactly. So, I mean, that's obviously, credit is typically the biggest sticking point when it comes to pre-approval. I mean, that's the go-to that we're going to check. Really, the three things we check on a pre-approval is going to be assets. Where's the down payment coming from? There are allowable and non-allowable sources of down payment, and this sometimes.
For grins, what's non-allowable?
Well, I mean, what we call mattress money. You can't just
a sack of cash.
Yes, you cannot just all of a sudden
show up with
have cash for closing.
People do that though, don't they?
Yes, I mean there are a lot of people who still maybe don't trust to put all their money in the bank, and they save in other areas and those kind of things. So if that's the case, we just need to make sure that they, get their source of funds, squared away.
Put the money in a bank.
Put the money in the bank, prior to applying for a loan, and let's make sure we know where it comes from, because that's going to be, once credit's worked out, then the down payment sometimes becomes the last minute tricky thing, because all of a sudden there's deposits going into accounts that we need to verify, moving money around, those kind of things. This is all kind of things that we'll talk about up front that'll make the loan process so much easier. If you don't have this kind of information, if you don't talk to somebody, then you don't know not to move money around. You don't know to make deposits. You don't know to, hey, I'm just going to borrow money from my sister. Well, that's okay, but we got to verify it. We got to track it.
And again, more time.
More time, absolutely.
So if someone gets all of their ducks in a row, then that even helps them with closing. They're closing, from contract to close. That window can be really
absolutely, and even
faster.
And there's a difference between getting pre-approved and then having to work your loan through the process. But also, Fairway has a program that allows you to go ahead and get full credit approved prior to even entering into a contract. And that way, all we'll need to do is get an appraisal. You can close in 2 weeks.
Wow.
And in this type of market, when you're competing against other offers, if a seller hears that one person can close in 2 weeks, the other person can't close for 6 weeks, which offer are they going to choose? They're going to choose your offer.
That's right.
They want to go ahead and get sold.
You're going to be a way better bargaining position.
Exactly.
So you talk about pre-approval, but what's the difference between pre-approval and pre-qualification?
Well, I mean, there's not a whole lot of difference. I would say a pre-qualification is more, you just call me and you tell me that you want to buy this much and you have these kind of debts and you make this much. It's more of I'd say an oral contract. Yeah, you're pre-qualified for this, but I don't really put a whole lot of credence in pre-qualifications. I'd like to go ahead and get pre-approved.
Okay.
Which in my eyes is going ahead and pulling credit is if you got some tricky income, allowing me to analyze your tax returns, look at your pay stubs, look at your bank statements for any kind of unusual deposits, those kind of things. That's a pre-approval in my eyes. So I would definitely lean more towards the pre-approval process than just getting pre-qualified.
Yeah, and you don't want any hiccups later.
Right.
So when I see a pre-qualification come by my desk, I'm like, eesh.
Right. I mean, Fairway is definitely front heavy as far as effort, what you've got to put into the process, because we don't want any problems later. We want to go ahead and front load everything up front, make sure that we get everything up front, take a look at it, and then have no issues later on.
So what other advice can you give someone who, buying a home is the American dream?
Yes.
And so many people feel, well, I don't have enough money to put down, which one can put down as little as 3%. Or tell me a little bit more about that.
Well, I mean, there are actual programs out there, bond programs, both on the Kansas and Missouri side, where they'll actually grant you the down payment.
So many options.
There are so many options where, there's USDA programs. If you're a veteran, you can get in for zero down. You don't have to come to closing with any money. So there are so many great programs out there. And once again, it comes back to just get the information up front. Get pre-approved. And like I said, part of the pre-approval process is my job is to analyze the information and get you in the best program possible.
Do you often hear people say, "Oh, I'd love to buy a house, but..."
Yes, and I think a lot of it has to do with misinformation.
Okay,
but
so
I heard this.
Tell me what some of those misinformation things that you hear from people.
Well, I mean, it's still, even in today's age, the golden one is, well, I don't have 20%.
I hear that too.
And that's just not the case.
So let's tell everyone, you don't need 20% down.
You do not need 20%.
Put that on the screen, Andy.
You do not need 20% to buy a home.
That's right. Although the more you have, the better.
Well, I mean, obviously it's going to lessen your payment.
Of course.
But, I certainly don't recommend, cashing out a 401k or some type of retirement where you're going to pay a penalty just to get the 20% down. Financially, that's irresponsible. And I think your financial planner, if you went with them and asked them the same question, they would tell you the same thing. You don't have to get the 20% down to have a very, very solid loan. And
let me just say to everybody, when you're online, just seeing what you can qualify for, you don't get this information that's like Scott is giving you. You don't have someone saying, no, don't pull that out of a 401k. Here's what I would recommend. You might have one of those little chatbot people that are, how can we help you?
Yeah.
But I'm all for face-to-face, person-to-person, and supporting local. So any other advice that you can give to people?
I mean, we've covered a lot of good ground today. Like I said, I mean, harping back to the original point, just start early.
Yep.
Get all your information to me. Know what you're getting into from the get-go, and the process will go smooth.
And people do it every 7 to 10 years.
Yeah, I mean, so you don't even have to be a first-time home buyer to forget the process, right? And
that's right.
I can't even tell you how many things have changed in the last 7 years in this industry. Things are constantly changing. Programs are constantly changing. If you're first-time home buyer or if you haven't bought in a while, definitely get some good information.
So I have another, we have about 2 or 3 minutes left, but
okay.
People... So say they have a mortgage and they have a company with their mortgage and they live in a home, but then they're not really thrilled with that company and they want to shop. So what we hear often is, well, I want to shop for a lender, a mortgage, a loan originator, mortgage company, but I don't want everyone pulling my credit because that's going to impact my credit score. If someone's shopping for a loan, how does that work? And does it affect their credit score?
Well, I mean, any hard pull on your credit technically does affect your credit score, but it's a necessary evil.
Okay.
And the credit bureaus are supposedly set up to where you can go ahead and get your credit pulled so where you can shop with different companies and not hurt it every time.
Do you have a story of a really good story that someone you helped and it was just like a heartfelt, or is that? I would think that feels good a lot.
Oh, those are the most satisfying.
Yeah.
When you, maybe you're dealing with in a situation and they've been told no, maybe by someone who didn't do their due diligence.
Okay.
And you just do a little more digging, and then you figure out, hey, maybe this isn't the case. Maybe this doesn't kill the loan, kind of thing, and you're able to turn it around and get it done. Those are the most satisfying, absolutely.
And overcoming hurdles and challenges.
Overcoming hurdles and challenges is definitely part of this job, absolutely.
Yeah, mine too, and
yes.
I love it because
I do love it as well.
Yeah, it's very. I mean, just to see the person's face. So, anyway, Scott Kiesling, everyone, with Fairway Mortgage, local mortgage lender here in the Kansas City metro area. We'll have Scott's contact information on the screen. So, Scott, thank you so much for being here today.
Lettiann, it's a pleasure. Thank you.
Good to see you.